What is good, guys? It's Rey-Jay back with another video, and in this one I want to break down what's going on with the overall market and talk about what's going on with the structure of SPY. I'm going to break down why it's looking more bearish overall, as there's a potential change in market structure, and how this may end up playing out for next week. But before I break anything down, all this information, before I get into any more details, let me just mention a couple of things. I'm firstly not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull and deposit any amounts of money into the account, you're guaranteed up to 12 free stocks. This offer has been extended for another 12 days, so check it out before they run out. They gave me a very, very good opportunity. Anyways, I want to break down something else that's very important. Unfortunately, the market didn't get much of a bounce today. It just continued to sell off for the large majority of the day. And something very big just happened when you break down these levels. So when I zoom out of the charts, I want you guys to notice that we had this critical support right over here. This area right here, let me just zoom into the chart and show you on SPY. So we had this support, this green trend line right here, which is helping this hold up. This is the historical support, and we saw this end up breaking. This is a very, very big moment. And that's telling us that not only is this looking more bearish, but we're getting more and more confirmations that favor the bears a lot more. And the sell-off we got was obviously the real move. And there's likely more things coming and more downside potentially coming with this trend. Now, part of why I'm talking about more downside is because of this right here. One reason would be the historical data. One of the things I mentioned in my earlier video was that there could be downside coming. I was thinking that the market may like bounce first and then end up dropping, but instead it just continued to drop. And let me open this in a new tab, make this a little bit easier to see. Actually, I couldn't really zoom in. Anyways, after or around September 15th, historically, the market starts selling off. I didn't expect it to be this bad or like this insane, but it is what it is, guys. And I don't think the market's done just yet. I think there's more downside potentially coming. But how do I think this downside is going to play out, and why do I think that? Well, one thing you have to remember is that the market was not expecting the Fed to raise rates again. The market was pricing in a Fed pause. But looking at the data with the increases we saw, at least a slight increase we saw in CPI and potentially even PPI, which is forward looking, it was very slight, but it wasn't that extreme. But there is a risk of higher inflation, and the jobs numbers are not still meeting all of the Fed's expectations. So I believe there's another rate hike coming either during the September meeting or maybe going into like the later meetings, right? That's very much possible. So we're going to be ready for this, and we're going to be watching to see what happens. So for next Wednesday, we have the FOMC rate hike decision coming out. For Wednesday, September 20th, and this could be something big for the markets. The Fed may not raise rates again during this meeting, but they may hint towards doing it again, and that could shake the markets. So, how do I think this may play out as we are historically in a bearish time? Well, we could zoom out of our chart like this, and we can actually look at some interesting formations. When we look at this like really bullish looking trend, you will notice that we had a very, very interesting structure developing. This was very bullish during June, July, pushing to this top right here and getting rejected off this critical level. And then you could even draw out like an Elliott wave sequence to kind of represent this downside. So if we pull up an Elliott wave count, you will notice that it's very much just telling. We had kind of like a this was like our one right here, this drop right here. The two was the upside. We had this three. You could draw the three all the way like up to here. That's one way you can do it. This bounce right here is like the four, and then we have this like five way down here. So this was like our Elliott wave impulse. And there's different ways you could draw it out, of course, but we had this really, really big, Elliott wave sequence that led to the downside, right? Well, we could be seeing a repeat of that. There could be a repeat of that forming, because what happened was we ended up getting a bounce in the opposite direction. This was like our corrective phase. And then we ended up forming this, this 1, 2, 3 rebound. That's one way you could count it using Elliott wave. And then that's pretty much it from there. And now we could be forming another one of those counts to the downside, because what could have happened was this was like our 1. We just saw 2, and we're about to form wave 3. And wave 3 generally is like the most violent wave. So what I'm thinking is it could be something like this where we get a wave 3. It really depends on how we react to resistance. But if it were to look something like this is not necessarily like out of the picture to end September, because September tends to be a very bearish month. And this is what the sequence could look like. It doesn't have to be perfectly straight. So for that reason, I'm thinking that the market's going to attempt to rebound, right? The market's going to attempt to rebound a little bit. Let me just show you what I'm talking about. But it's going to likely fail because there's a change in market structure, right? We have the 4-hour time frame looking more bearish. We had this high here. We got rejected. We tried to come up and we made a lower high. And now what could happen is over the next few days, we're going to see SPY attempt to rebound and retest 444. Maybe retest this like trend line right here. This is the trend line where we got this rejection from. We could see 444 or 445 being retested and maybe get a rejection from there. And if we sink to critical support at 442, we have to hold this level. Because if we fail, 440, we have some support there, but it's not extremely strong. The real support is going to be around this like 436 level. So we could get a rug pull all the way down there and just flush straight down to like 436, this 436.5 area. So this zone right here. And then afterwards, if we do get some kind of bounce, there could be one last catalyst that'll sink this even lower into like the lower 430s before we get some kind of bounce afterwards as we approach October. But hopefully this was like really telling about what just happened, because the market is now really shifting directions and we confirmed a lower high, which is now confirming the downtrend. And this is like translating into different stocks. If you look at this, the market's just looking weaker. There's going to be an attempt to bounce, but it's going to likely fail. And I just want to add that looking at SPY, I'm going to use the MACD since it's a little bit easier to see like this without any drawings or anything. On the weekly chart, we have a bearish cross in the PPO, and this is turning a little bit weaker. You guys can see this. Now, with that being said, that doesn't really change my view on the monthly, because on the monthly, we still have this cup and handle that's forming. This looks like a cup on SPY. The handle is yet to be formed. There could be a little bit more downside coming, yes, but like I said before, as we approach November, there's likely going to be more upside anyways. But for the short term, we're not in November yet. September is still upon us. There's likely going to be more downside. So if you felt like you missed this opportunity, there's going to likely be another opportunity to short if you look for potential re-entries. It also depends on how we end up reacting. If we break below 442, we could just start tanking really hard to like the 436, 435 area. If we rebound a little bit, there could be a better shorting opportunity, which I think is most likely what's going to happen. And overall, it looks relatively weak. Now, what else makes this weak would be the fact that when you look at Nvda is looking weaker too, because Nvda broke below this support right here around this 442 area. And the next one we talked about was just about here. We have 437 and also 435 as the next critical level. And we're going to be watching this right here, this 427.5 area. Nvda has to try to hold around here. If it fails to do so, these lows could be retested all the way down there. But we're not going to worry too much about like 420 and any of that just yet. We need to see if Nvda does end up breaking below these critical support zones. But if anything, like Nvda looks more bearish. It looks like it could be coming all the way back down to the 420s very soon, because it's been establishing lower highs and lower lows, and it invalidated the inverse head and shoulders it was trying to form. This change in market structure is turning more bearish. And Nvda, if you look at this trend line that it had right here, which was acting as the resistance, Nvda kind of broke above it and came right back below it and got rejected off of it, which is a bearish signal, forming another, sign of weakness. And historically, in September, this does happen a lot. We have invalidated some potential bounce signals, so it's looking weaker. Apple's also looking weaker. If we take a look at Aapl, we have this head and shoulders that is technically still valid. We failed to get a hold above 177, and there is potential for this thing to drop all the way down to 171. So Aapl looks weak. It could even go lower than that into like the 160s, but it looks weak. There's going to likely be more downside. We're going to be looking for a rebound and a retest of 176.5 before it continues lower. I will talk into more details about it later on. The QQQ is also looking weaker. If you look at the trend, it's just continuing to break down. So we had this, rising wedge, which led to the downside. Our critical support is going to be 368. If that fails us, It's going to come right down here towards this 366 area. That's going to be next if this support fails us, which it most likely will eventually. And then below that, we have 361. Last time I checked. Well, technically, we have like 359 to 361. We're going to be watching that level as well. Excuse me. Sorry, guys. And then we're just going to do what's best for the time being. So, unfortunately, the market's looking weaker. The best thing I could do is just remain calm, cool, and collected amidst everything that's going on. And with all this happening, look for a potential rebound, a retest of like 372 or so before we continue lower. Looking at Tesla, Tesla's also looking relatively strong in a way because it's continuing to hold its critical levels very, very nicely. But the thing about Tesla is that the market's thinking is going to affect it to some extent. Now, just because Tesla has relative strength does not mean it's just like in the clear. So there is a risk of downside. And I just want everyone to be prepared for this. We're going to be watching Tesla rebound with the market and try to retest like 278 or so. But if Tesla, retests 278 and rejects off this imbalance right here, I could potentially see it do something like this where it attempts to rebound, but it may get some temporary downside because if the market sinks lower, if let's just say Jerome Powell causes a rug pull or if something happens between Tuesday and Wednesday, there is a risk of Tesla revisiting the 265 area if 266 fails us. And then another thing that's concerning would be the gap on Tesla. We have this big gap all the way down to these lower levels, all the way down into the 250 area. So I want to be very careful with Tesla during a time like this. Now, looking at the chart, as Tesla made that high, one thing worth noting is that we established a bearish divergence. Right here, you guys can see there's a bearish divergence that developed on Tesla. Looks a little concerning. It's not necessarily like dead. It's not done just yet. There is potential for it to try to hold up. I think it's going to outperform the market to some extent. It's not going to drop as hard, but there is a risk of downside looking at the bearish divergence. Now, whether we push a little bit higher and still hold the bearish divergence and then drop, or if we just start dropping from here, there is a risk for Tesla, and we have to be very careful. I know it was only down like 0.6%. It's going to try to rebound a little bit, but just be very careful because you have to pay attention to these technical signals and how the whole market may affect Tesla. So I'm going to be looking for a rebound. I think Tesla could slow a little bit thanks to the market, but when the time is right, once we're through September, I think Tesla has a lot of upside coming thanks to the Cybertruck and etc. I'm still very bullish nonetheless. So anyways, I just want to thank you all for listening. Hopefully this video was helpful for the weekend, and I'll see you guys very soon. Thank you and peace out.